Hello everybody, during the last webinar we had looked at this chart, the pound yen, and let's just make this a chart reading exercise. So when we trade the forex market, we basically look here at this 5 chart layout: 15 minute, 60 minutes to 40 minutes, daily and weekly. So these are the consecutive higher time frames. Well, with this chart we actually had a couple of patterns developing here, and we discussed that during the webinar. You can go back and check that. So this was an S2 pattern short on a 5 minute, so 2 time frames lower, and that was a window of opportunity. The price might actually drop, right? Drop into this area. This is a magnet level. Well, let's talk about chart reading now to make this example. Why was this an opportunity for this drop and for this short trade to work out? Well, down here we've got the 200 moving average, but as well, we have prior price action. If we look 1 time frame higher, this small pattern, it's basically embedded in here, and the prior price, the level of price support, well, is down here. After this strong up move, well, you can expect the price comes back, right, at least to the 21 moving average dynamic support, or typically, well, it comes back to what was primarily resistance, and after the breakout will become support. And that is actually that was during the video where we actually saw that that's what happened, right? It came down and hit hard, right, this level, which is a cluster of the 200 on the 60 and on the 240, this support level. And on the daily we're actually coming coming back here. Well, this is another level, right, support, and now it has become a resistance level that had become support. It dropped up here on this green line, and as well, well, this up move found actually resistance here. This up move, these 3 bars, is basically this one daily bar. It found resistance at the 200. So that was another reason why that should work out here, this quick short trade. Well, that happened, right? We saw a strong pull down to this cluster level. And whenever you see a strong a touch, right, well, you can expect a bounce. And as we are here in an overall uptrend, this is uptrending. Well, this is uptrending, and this is in an overall uptrend too, where we can actually expect not only a bounce, but that the bulls break to a new high above the last high. And that's what happened here, right? So we had down here, where we had actually the idea of trading that long, right, for a couple of 240-minute bars, with having in mind, well, that we should actually see a second attack, right, on breaking the dynamic resistance, the 200, and that's what happened here, right? So the bulls broke that, and now they're coming back, right? So the bulls and the bears, they actually like to play with the 200, and that's what we see here, right? Breaking through, coming back. Now let's have a first look at this up move, right? It's a bound and it's a move. It's a swing move in overall trend direction. Well, we got another couple of patterns here. This is an S1 on the 15-minute chart. We cannot see, it's too far away, too far back. But that's an S1 on a 15-minute, very tight stop, right? So knowing that chances are good that we're actually breaking this last high, which is this high, right? Well, that's a great low risk idea, right? And it easily went well beyond the 4R level, breaking such a level. And that's the light gray line. Well, that's the stop run level. Whenever we break such an important level, we can actually expect that there's a price acceleration to the upside. And well, we were lucky. We got another pattern here. Well, this time on a 5-minute chart, we can see it here. Well, we would need to go basically 2 time frames lower to see this more pronounced. A very tight stop as well, based on an S2 pattern, and that was just before breaking this stop run level. So we basically had a pyramid, right? S1 followed by an S2, and then running this stop run, right? Well, just after breaking this was another target area we had mapped out when we were down here. So after breaking this level, which actually clustered here with a big number, the 164, with 4 zeros, which is another stop on low. So it actually broke that level. It didn't develop a lot of follow through, but the market offered us another pattern. Well, this time an S1 long on a 5-minute chart, 2 time frames lower than this one. And that allowed as well for a very low risk idea. Well, these are now 3 trades in a pyramid, right? And that's the stop run move, right? That's what we see, what comes out of breaking a prior high, this one here, stop run move, and breaking away from the 200 moving average. And during the workshop, I clearly stated that, well, this should continue more. And once the stop run move is over, well, we should see a pullback, right? A pronounced pullback. And I mentioned during the webinar, well, it's most likely back here into this area. Well, that's what we saw, right? Why this area? Well, because it's an area of support, right? Again here, the big number 164, prior price action, and it comes back here to this 21 moving average. That's dynamic support. We can see how price bounces off. And we made actually a second step lower, right? Well, where did it go to? Well, it goes into and close to the 200 moving average, right? Supports, dynamic support. Bounces off earlier, so price shies away, and then in a third leg, basically, right? First leg, second leg, third leg. Well, here we see the touch of the 200. We see a nice test of the 21 moving average. Well, that's always good in an uptrend. If price comes back, touches, or even tests, meaning goes beyond 21, going beyond the 21, beyond the 21, beyond, well, we can expect that it bounces off. It's kind of the trampoline effect. And we have to see now prices again here on the daily right at the 200. So the 200 is a magnet level. We see price moving up and down till it breaks away. But as we are here in an uptrend, well, the probability is higher that we break away to the upside than to the downside, right? So if and once we break away from the 200, what is the next level? Well, there's no resistance in the way. Well, up to here, right? That's the next level, which is the prior high. And that's a really nice stop run level. Well, we see another big number, the 170 with 4 zeros. Well, it's actually 5 zeros, so it's 17 and 5 zeros. That's a very strong big number, and prior price resistance, a triple top. So if the bears can break this triple top, we'll see a big move, right? So this would basically be this level, and I've already marked it, this stop run level here on the weekly chart. So if this gets broken, well, we move to the next level, which is this one, and then that's the all-time high here on the weekly. Should this break, well, we're off to new ground. Well, let's have a look on the monthly. Well, on the monthly as well, for many years, we haven't seen higher prices. Well, we have seen here 8 years back, so price was up here. So this is our next, once we break to a new high, well, this is our next target area, which is a magnet. And we should actually get there over the years to come during these big currency shifts. Expect strong trends, and we trade the trends based on low risk ideas coming from patterns, either short or long.